What's up, guys? It's Brian from HASHWAREHUB. Hit that subscribe button, hit the notification bell down below, and also look at our description. In our description, we have a link to our Facebook trading team. Go onto Facebook, click to join, and we will grant you access there. It gives more detailed information throughout the day in which ways in which we're trading the markets, which I think people are finding more and more valuable. We just started that team up, so go there. Definitely hit the subscribe button, hit the notification bell if you are new to us, because we have information and you want that information coming directly to you. So we're going to go over a few different currencies here: Cardano, Ripple, and IOTA. Not necessarily in that order. I think we're going to do Ripple at the end because we're going to look at Ripple from a few different chart perspectives. But let's get right into it right here. So right now we're looking at Cardano. Cardano, this is a daily chart. And I believe this is data coming from CoinMarketCap. And if you're new to us, these indicators may not make much sense to you, but they will. Go look at previous videos and pay attention to this video too. They're not complicated, although the calculations are complicated. The interpretation is actually really simple and straightforward. But really, what are we looking at here? Okay, let's just look at price. Sometimes people get a little too kind of like crazy about like, oh, this my line's moving here and that one's jagged and this one's smooth. Now, you got to kind of like look at everything through kind of almost like fuzzy glasses and just look at it from a very kind of high level, perspective. And what do we have going on here? Okay, so we got this Cayenne line. This Cayenne line is a hidden support level. And the price comes down to the Cayenne line. The Cayenne line does not go to the price. Sometimes I call it the blue line, but really it's the same thing. And what has happened? Okay, 2 days ago, okay, this is the 5th and this is the 6th. Okay, this is the close of the 6th on CoinMarketCap. And what happened? The price started coming down to the blue line, and that's what we've been saying for quite some time now. The longer the price stays away from the blue line, the more probable that it's going to come to the blue line. And that's exactly what happened here. The price had started coming down towards the blue line. Okay, we're still seeing a bullish signal here, and unfortunately, Cardano is probably a bad one to start off with because there's not much data here, and our algorithms need data in order to work. And so you can see they really didn't start working until like here, except for the MACD. But that's just kind of just what happens with our algorithms. So now, what is there to do right now? What are we really seeing? Okay, so we're still seeing it's pretty bullish. Okay, however, the way in which we trade in such a manner where we're risk averse. So as the market's running up here, we're taking profit. Why are we taking profit? Because we don't want to give it away. Okay, we don't want to give it away at all. We're also seeing here that there's a slight divergence between the actual D trend here. This is what's called the market D trend, and the actual price here. It's a very small divergence, but basically we're just looking at the slope. The slope of the rise of the D trend is much less than the slope of the rise of the price here. And that tells us that, maybe things aren't as kosher as they should be. And that maybe there may be some little cracks in the underlying foundation. So, if I were holding Cardano, and we do, I would be taking some of my, if I hadn't already gone ahead and taken some profits up here, okay, I would already be going ahead and starting to take my stop losses and kind of getting them a little bit closer, not on the full position, but on a portion of the position. Okay, that's what I would do, and that's what I do. So the bottom one here is the sign indicator, and the sign indicator, we don't use this all that much on daily data because daily data tends to be more trend-like and not cyclical. But at the same time, this is MACD right here. MACD is showing super bullish. So we're not all too disturbed, feeling that this is going to go ahead and just, kind of crash in the next day or two. However, at the same time, it's going to be giving up gains. We believe it is going to be giving up gains. It already has been giving up gains. Okay? It already has been. So why let it go on any longer if you're holding it? And why don't you take some profit off the table and de-risk your position? Next, let's take a look at IOTA. Okay, IOTA is a different animal here. IOTA, you know, we had said right here on the trend strength, that anytime the trend strength goes from this, you know, real positive territory, straight line territory, the second it ticks off is like the first indication that something's not going right. And look what happened here, okay? This thing came down right here, and boom, the next day, the price came down. It came from like 5, and when it's down low to like, let's say 2.7. Okay, that's almost half, like in one day. So now the hidden support level here, okay, is not here anymore. Okay, and so what that's telling us is that the hidden support level is saying, I don't know how much real support there is here at all. So I'm not even going to show up. Another thing to take a look at is, you know, the sign indicator here is showing that it's at a top, okay, and that it's going to start coming down now. And what's going to happen most likely is that the price is going to start coming down now. So same thing with IOTA. You know, I would really be careful if you're holding on to positions here. It just doesn't really make sense to be long IOTA right now. I don't care what the fundamentals are. It doesn't make a difference to me. And by the way, if you're new to us, we don't give a rat's you know what about fundamentals. I could care less. I don't read the stories. I don't really know very much about what a lot of these coins do. Okay? I mean, I really don't care. All I need is the chart. Because the fundamentals actually fill the reasons into why the chart is doing what the chart is doing. So it's just news stories. It doesn't mean anything to me. I have never really found anybody that actually trades on fundamentals well. And I was on Wall Street for a long time, trading big money in some major name brand institutions for quite some time. So, you know, I don't know. Maybe you can. I can't. Anyway, let's move on to the next one. This next one is Ripple, okay, that I want to take a look at. And you know, Ripple is kind of a different beast from all of them. And one of the things I really don't like is this. The D trend is going sideways, and the market went up, like up hard. And so that's a huge divergence. Okay, what is a D trend really? D trend is, you know, I don't want to talk about this technically because I don't want to lose people, and there's a lot of calculation that goes into it. But basically what it does is it strips out all of the noise out of the market and says, let me look at the actual data of the market. And that's a pretty complicated process how it goes about doing that. But what it does is that since it strips away all that noise, think of almost like an old school radio when you used to tune the radio. Okay, when you're tuning the radio to hone in on that signal. Now that signal is just a series of waves, but you need to make sure that you can get all that noise out of the signal in order to really hone in on it. And that's exactly kind of what D-trend does. So when the D-trend does not go, when it's not correlated to the price, it really makes us upset a lot. It does, because I'm not sure when the market's going to drop off. And this divergence here between the price of Ripple and the D-trend is one of the largest divergences I've ever seen. It's been going on for a long time, a really long time. And I think a lot of that has to do with the fact that there is a ton of money running into this space. A ton of money. And the second that money goes ahead and, you know, there's no more left to kind of bid up the price, this thing is going to collapse like nobody's business. And, you know, again, you could say, well, the coin is doing this and the coin is doing that and this, that, and the other thing. Oh, that's all great. That's all great, you know, fundamental news. Again, I could care less about it. The chart's going to do what the chart's going to do. And it very well may be a great coin, and it may be doing all these great things that everybody says it's going to do. But, you know, right now, the probability looks like there's a correction before this thing is going to run any further. That's what shows. That's what the chart shows me. Okay, that's where I would be betting. And you know, a lot of trading has to do with probabilities, and I like to put the probabilities in my favor. And so in order for me to put the probabilities in my favor, I would be de-risking this position. Now, one thing of note is that these two candle patterns of the last day, and I don't really look into candle patterns all too much, but this is one that I like a lot because it does tell me a lot in certain circumstances like this. It's not a perfect fit for the definition, but it's really close. You rarely do get a perfect fit. But this is something, these two candles is something called, what's called a doji, D-O-J-I. Look it up. Basically what that means is that the open and the close of the candle is pretty much at the same price. And that there's a, you know, a wick above, there's a wick below, can be, and the open and the close is pretty much the same price. If there's not a wick above or not a wick below, those are called different things. So it's not; those are not dojis. But what a doji tells me is that there's uncertainty as to the direction, and when it happens 2 days in a row, it's usually a change of trend. Okay. Now, it's difficult sometimes to measure change in what trend. Is it a short-term trend or is it a long-term trend? My bet would be it's a change in the long-term trend. Okay, the long-term trend is what? Up. Okay. Now, if we didn't even have doji candles, I would still be saying the same thing that I've been saying for quite some time now. Let's say the price is like, I don't know, let's say 2.7. The hidden support levels, like, let's say 1.5. So wouldn't you want to go ahead and reduce some of your risk? The price is up here. The hidden support is down here. And I'm telling you this, that the hidden support's down here. It is down there. Okay, this blue line works. It works more times than it doesn't work. So one of two things is going to happen. Okay, either the price is going to come down to the blue line, or the blue line is going to tick up a little bit more. But eventually the price comes to the blue line. It always does. It always will. It always has. And that's just the way things work. It eventually will. And when that happens, okay, you don't want to be the one that's saying, well, you know something, I should have sold like 20% of my position up here, or 30%, or 50%, or 70%. It's all up to you. So the D trend is usually one of the first thing that tells us, hey, there's something going on here that possibly this trend may not be going on for much longer. Now, the trend strength is still showing, you know, it's very bullish. It doesn't mean that the trend strength tomorrow can't have a little tick down. Once it has a tick down, that's like imminent that the price is going to go down. Okay, doesn't mean it's going to go down to 50 cents or zero. It just means the price is going to go down. And the way these things move, this thing could cut its price in half, like when you blink. The next thing too is that the sign indicator is at basically all-time highs. And again, we don't like to use sign indicator on daily data because daily data is more trend-like, not cyclical. So, but still, it's at all-time highs, and we have to respect that. That eventually it will turn back down, and when it does, the price normally follows. So that's kind of like the bearish attitude at this. Okay, that's like, hey, protect yourself. Let's go take a look at something that's a little bit more bullish. All right, so this is the 2-hour chart, Ripple dollar. I believe it's Bitfinex. So it's a 2-hour chart, and at first it's really not obvious what I'm going to say, right? So if you notice, you're looking at charts a lot. So one of the things I like to look at, and there's a laundry list of things that I look at. One of the things I look at are what's called fractals. So basically, it's the same type of pattern repeating itself. And we have that here, okay? this one here, this one here, and this one here. Now this one and this one look more alike than this one does to these two. But let me go ahead and let's look at 2-hour chart. Yeah, okay. So let's look at a 2-hour chart here. You see the market runs up, it comes down, it goes up again, right? And then it goes sideways a little bit, and then it goes up. Okay? Excuse me. Same thing here, okay? Not as pretty, but same thing here. Goes up again, okay, comes down, it goes up, it comes down a little bit, and goes sideways and runs up. So normally what you do when these types of things is you say, okay, I see this pattern, and then it went from here, and then it went up to here, okay, and then I see this pattern, and went from like here, and it went up to here. I see this pattern, okay, and what is it going to do? Let me measure this versus this and this, and then see where it's going to go from here up. So that's what I'm saying. There's also a bullish attitude at this. There's a bullish, thing you can look at here, or a bullish, projection you can put here. However, if you look at like Elliott wave analysis, this wave has been going on for a long time. That it's bound for like a major correction, not a small correction, but a major correction. Okay, these are small little corrections. Okay, but more of a major correction. Okay, let's say for example, this this kind of whole one leg came up here. Okay, and then it would come back down here, and then it would run up again to like much higher, like $7 type range. Okay, I'm not trying to say that it won't get up there, but in the meantime, it doesn't look like this is going to run for much longer. However, at the same time, if you just look at pure fractal type analysis, yeah, fractal analysis would say, yeah, okay, this thing is going to run. Let's say this one went from like let's say almost $1 to $2.40. So let's say it moved up about $1.40. So this would go from here, okay, let's say $2.60, right? So that would move up to $4. So yeah, we could put a price target on this of $4. I don't think it's that likely though. I think it's pretty unlikely. So that's kind of our 2 cents of what's going on here with Ripple. Like I said before in the previous charts, really you should de-risk in the event that this shows that this is going to pop again. You do have a chance to get in again. But if it goes ahead and it drops off, you probably don't have a chance to go ahead and recoup some of those profits for quite some time, unless it does move up again. But that could be, who knows? That could be a long time. That could be a month from now at least. And you could be going ahead and taking that capital and putting it into other types of currencies that are going to run, 2x, 4x, 5x, 10x, over the next however many, weeks and months. So we're going to leave it there. The video went on a little bit longer than I wanted to, but if you're new to us, hit the subscribe button, hit the notification bell. We're also going to be coming out with a whole bunch of other cryptos, a bunch of altcoins that we've been following for quite some time that we really do believe are going to have a huge run up here, 2x, 5x, 10x types of runs. So with that, we're going to leave you to it. Have a great night and happy trading.